what a nice heading to start with, Wild West. So I'm going to give you a slight idea before I start the presentation very quickly. I come from Switzerland, live in Switzerland. I'm Greek, and I am in a blockchain company responsible for creating what is called the universal currency to be released next year. But equally important, I'm a member of the Crypto Valley Association that my previous speaker just mentioned, part of the regulatory group, and responsible or heading the central bank's digital currencies monetary policy task force. So what I would like to do is show you the problem, go through the problem, and then demonstrate that we have the right time, which is very important, and then we'll touch bases of the alternatives that link to central banks' digital currencies, and I'll let you choose what you think is best going forward. The crowd of madness. That's US. You have 5 agencies, and you have 4 different definitions. That's a problem. The universal picture. Let's see what is the crypto definition. You want Germany, you want Switzerland, or you want Argentina, Colombia, whatever you choose, there is a great variety to choose from. So there is no uniformity. Regulation. Well, be my guest. There is no unified regulation. Everything in every country looks different. That's a problem. Tax framework. Well, why nobody talks about tax? Monetary policy without fiscal policy. Can you imagine that? And taxes are one of the great reasons why the states want digital currencies. Are you surprised? Tax will be transferred instantly to the tax office wallet at source. Nobody would have to wait at the end of the year to do a tax form. It will go straight away to the tax office. Imagine how the insights that the government would have about their expenses and the income. Amazing. Never done before. Well, we use the word cryptocurrencies, but let's see about the money definition. Does it really, the way it is right now, fit the bill of currencies? Or is just crypto assets, mostly traded under the assumption of extraordinary gains as a result of irrational behavior? In one word, trading assets. And until recently, we have left the big boy out of the picture, the gatekeeper, those who can change things, or at least there is no way they will not be asked for their opinion if the world was to change. Do we need them? Well, I put a few points down there, but what I demonstrated before in front of your eyes is that we lack uniformity, we lack a standard. So we are like a net that spreads, but we don't have something that will dominate. And rest assured, that Bitcoin is not the dominant if we talk about currencies. It's the dominant about trading assets, given that it has half of the market cap of the whole market of cryptocurrencies assets. But it's not the coin, or it's not the currency of the future, and I can take questions on that if you want. But digital currencies issued by banks could put a standard for the rest to follow. It doesn't mean they will dominate, but they can put a standard. What are the motives? Well, do you remember interest rates to zero? Anyone in that room does ever remember interest rates going to zero before? We had inflation, and interest rates going to zero, that's an anomaly, but a prolonged anomaly. Central bank, zero. Bank of England, nearly zero. Swiss bank, negative. So in Switzerland, actually, you have to pay to put your money in the bank. Weird. And most of the other countries follow. Now let's look what happened to the rest of the countries. It's amazing. Look at the red boxes. The red boxes indicate the shift to the yield that goes to zero or minus. This is not by coincidence. It's happening right now. The world doesn't want you to have cash currencies in paper and coin. Negative interest rate on your mortgage? We should be moving, all of us over there. We get a mortgage, we buy a house, we pay less money. I would like you to read that. That's good for Greece. That's amazing for Greece. So I think that's a benefit we have to take full advantage. So that's the equation that indicates if we're going to have inflation or not. Money supply velocity, nominal GDP, equals nominal to money supply multiplied by velocity. To get inflation, money supply multiplied by velocity, greater than the potential GDP. Now, historically, let's see where we stand with money supply. We're approaching very, very, very low money supply. And at the same time, the velocity of money is nasty. So the money doesn't circulate. What's the likelihood? That's my statement, not my company's, and definitely not the Crypto Valley Association, although you'll find that quite often there. I believe that the probability is 80% we're going to have the first central bank digital currency issued in Europe or the US within the next 2 years. China is doing it, so the window probably will shrink for obvious reasons. You don't want, or they don't want the Chinese currency to take over international trade somehow, so there would be an alternative coming out pretty soon. Every central bank right now in Europe and the US has got teams working on digital currencies and the impact on their tier 1 banking. First scenario, you take out the tier 2 banking, sorry. You take out the commercial banks. Is it feasible? Well, what happens is the central bank becomes equally a commercial bank, takes bank accounts on their books. So people will bank with the central bank. That's not nice for the infrastructure and the investment that has taken place for years and years for tier 2 banks, commercial banks, and also has got a potential expense, a political expense, because that hits the middle class. Well, that's a peculiar scenario, which actually what it does, it transforms the commercial banks into commercial digital banks, in the sense like you have your normal account and next to it you have your wallet attached. So the central bank finds a way to utilize the infrastructure and the investment of the existing tier 2 banking, and it doesn't bake too many eggs. But, well, what does the central bank do then? Would it hold accounts? Because if it does and there is a crisis, people will abandon the tier 1, the commercial banks, and go to the central bank because they will seek for safety, given that reserves are kept at the central bank, probably gold and other currencies. But the central banks would keep KYC, AML, and other interesting things under their books because they would like to have this control. Or could it be another form of currency? Ex-managing director that said a universal currency. That's very interesting to hear the word universal without a universal government. In the past, we thought universal currency equals universal government. That's impossible. Well, right now we start talking about universal currencies without universal governments. Well, how it works, probably the central banks, they put their deposits into that universal currency, and suddenly and slowly the system starts adopting, first with corporates and banks, the universal currency, and then somehow when the crisis happens, a universal currency takes over the local or national currency, being a digital or a fiat currency. Well, there's another scenario, though. That's very futuristic. This is the scenario where you have central banks and private sector coming together hand in hand and issue a digital currency or a number of digital currencies, which could be a hybrid between central bank digital currencies and private sector digital currencies. And you have within the borders of the state, virtual borders, your local currency, and then you have a cross-national currency, for example, for the global trade, or where you, as a consumer, you go and do your holidays in another country where you don't have to suffer exchange rates. But you do have a local currency, which may have a different interest rate, for example. So you can have your wealth balanced out. Still, the central banks maintain KYC. Well, it seems that I'm not the only one thinking about global currency. Where to find it? I'm going to run a bit because I don't have too much time, and this is actually a subject that you need a day to go through. But let's say it will be somewhere over there. That's the flower of money. Definitely wouldn't be something which has got high volatility. I mean, it's no point in telling why. Nobody will accept something that goes 10 or 5% up day 1 or day 2. They would want something which is stable, because stability means predictability of purchasing power. Well, what is stable over the years? Gold. Don't get scared, we're not going back. Gold was broken for a reason. Black swans. Well, out of the 10 known black swans, 8 for gold were positive, talking about stability. In an environment of high inflation, low inflation, gold performs better. Versus other currencies, purchasing power, especially for stable coins that get stability through pegging to the dollar or basket of currencies like Libra, this is what is going to happen in 20 years to the currency. You're going to lose 40 to 50% of the purchasing power by pegging to a currency called dollar or a basket of currencies. Well, the idea is a better non-linear allocation of emergency wealth straight directly to the people that they needed without being lost through financial instrument in between or through the banking system. Coexistence. Fractional transaction in cash. Well, you can send 1 unit or send small units to the people who need it. You cannot do that with the current financial system. It doesn't work like this. You can go to 0 interest rates. So you can have all day. You can trade all day. You don't have weekends. You don't have non-working hours. You can interact with many different monetary systems. You can have interest-bearing or non-interest-bearing. You can accelerate world economic growth, and you can save from transactions. Right now, if we take the World Economic Forum, the projection that 10% of the global GDP can potentially bring 600 billion, if I'm not mistaken, back to the economies and distribute it to the actual low level of participants, those who create the value. So I'm going to close here, and I'm ready to take your questions. This is a very controversial subject, and I'll be happy to answer any questions you come with. Thank you.
Thank you so much. Thank you. We have time for just one question, brief one, in order to keep our time in order. So we have time for one question. Who would like to be the lucky one? Yes, please. Thank you.
Hello. You said before that gold is stable, but gold is kind of volatile in comparison to the dollar, let's say. Actually, stability doesn't really exist in the long term in any currency. There is, of course, not so much volatility as Bitcoin has, but how stable can a currency be?
A currency can be very stable, much stable than any fiat currency, a digital currency. much more stable than any fiat currency ever been, because you can do at the front end the central bank monetary policy through algorithms, and at the back end, if you have pegged it or backed it by an asset, you can use a mechanism to stabilize the price. Now, there is a solution that my company is proposing, and but I will not go into that right now because it has not been released. Unfortunately, not yet. But there is a way you can create, with innovation, a stabilization mechanism that isolates the underlying volatility of the asset, which is backed, and the front-end volatility, which is the byproduct of supply, demand, and irrational behavior.
Okay, thanks.
Thank you so much.
Thank you.
Thank you.
Thank you very much.
Thank you.